Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor, online at stevesaretsky.com. Welcome back to the show, Steve.
Yeah, thanks for having me on.
Steve, your November 2020 edition of the Saretsky Report is now out. What's in it, and where can people get it?
It's usually every month. I just write a 20 to 30-page report on the Vancouver housing market, so it's definitely pretty in-depth. It covers a lot of my sort of larger picture views on what's happening in the Canadian policy landscape and what's happening on a more micro level too in the Vancouver housing market. So you can find that at on my website, stevesaretsky.com, and you can sign up for that, and it comes to your email inbox once a month.
How are November sales and price figures looking in housing in the low end to the high end?
Yeah, it's definitely like a segmented market right now. I think that obviously the market gets painted with a sort of a broad brush, but in general, it's hard to sort of ignore the numbers. I mean, at this point, the first couple months everybody was talking about pent-up demand, but here we are in November. Home sales are up 23% year over year. It was the highest level of sales. So the highest level of sales for November since 2015. So, you got a 5-year high in sales, and this is, now we're in November, right? So this is not like I think in June, July, August, you could have made that argument that a lot of that was pent-up demand, demand that was suppressed in April and May because the housing market was shut down. So naturally you should see sales pop higher. I get it. that was kind of my view as well. But I think now that we're in November, again, it's just now 7 months here since this sort of shutdown. Again, my sort of argument has been, at what point does the narrative start to shift from pent-up demand to the beginnings of a new bull market?
So, when you said segmented, what segments are doing great and what's lagging?
The strongest segment of the market is the single-family housing market. Everybody wants more space. That's where you're seeing rapid price appreciation. You have house prices up since COVID, since basically April. You have detached single-family house prices up about 10%. And then you have the condo market, which is kind of languishing. Obviously, people wanting more space. The investor side of the market, typically a lot of the condo market's driven by these, mom-and-pop investors. That segment of the market is pulled back. So you're seeing less demand there. You're seeing, don't get me wrong. The thing is, when you look at the condo market, the condo sales are still running at 5-year highs too. So it's not like a slow market for sales. The thing is, you just have a lot of new listings coming onto the market. I believe you have record high number of new listings in the condo market. So the new supply is kind of overwhelming the sort of strong sales, and overall that's keeping the condo market, I would argue, is in a balanced buyer's market. So that's kind of where we are. But then if you look at the single family or the townhouse market, those two segments are red hot.
When it comes to prices, how are condos doing and how are your detached homes doing?
Yeah, detached, I think officially is up 11% year to date on the detached. So again, I think if you had pulled any sane person back in March or April and asked them where, the detached, housing market would finish by the end of the year, I don't think you'd have double-digit price growth, in anybody's forecast, even somebody that was extremely bullish, that was, heavily invested in the industry. I don't even think would have told you that. So it's definitely caught a lot of people off guard. And then you have the condo market off about 5%, I think, year to date along those lines. So, that's just kind of where we're at right now. It's a tricky market to navigate. And at the end of the day, I think that we have, federal and, monetary policy, fiscal and monetary policy is essentially overwhelming the the weakness in the general economy.
What is the bull case for BC real estate, and what's the bear case for BC real estate?
I think the bull case is that you have 7 months now of quote unquote pent up demand, where you're seeing basically record sales volumes. You're seeing double digit price appreciation. And now you're heading into, we've wrapped at the end of the year here. Now we're going to head into the next sort of market coming up. Is going to be in, I guess you could say January, February, but really going to be wrapping up here now, coming up into the next spring selling season, which really ultimately starts to get underway sort of in that month of February. And you look at it and say, well, we've just started rolling out a vaccine. I think that the worst of the virus is probably, 3-4 weeks, as we get through the other, the last bit of this. I think that there's light at the end of the tunnel. And so I think that moving forward, you look at it and say, okay, well, the housing market is as strong as it is right now. There is no level of policymakers that have any desire whatsoever to actually rein in stimulus. So I don't see any case where all of a sudden the Liberal government is going to start reining in stimulus. And monetary policy, they've been explicit in telling you that they're going to pin rates to the floor until at least 2023. They're still buying $4 billion of government bonds per week in a massive quantitative easing program. So you have this unbelievable monetary and fiscal policy that is going to continue for the foreseeable future. And housing is already doing strong in this pandemic/recession, which I think is slowly getting behind us here with the vaccine. So I think that is a bull case that this thing could take off, because you don't have, and let me make this clear, you don't have the speculative activity in the housing market right now. It's being driven by end users. Flipping activity has collapsed to, I believe, a 10-year low. And the investors are not driving the market. You have significant weakness in the rental market. And if the investors start to gain some confidence, which is what I'm seeing recently, that will start driving more demand in the housing market. So, that's the bullish case. I think the bearish case has always been, your mortgage deferrals. There's some people that have lost their jobs. There's some businesses that are going to fail, and there is going to be, some insolvency. There's going to be a wave of insolvencies, and whether or not that can dwarf the fiscal and monetary policy stimulus, remains to be seen. And so far it hasn't.
We'll have more with Steve Saretsky right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Steve Saretsky. Steve, we're now in the second wave of the coronavirus and lockdowns, with businesses shuttered and people out of work. Can this boom in real estate last?
I think it can. I think, as I just kind of highlighted before, despite economic gravity suggesting that it should come back to reality, the reality is we just got through, I think, the worst of the economic pain. I would argue is, massive shutdowns and a lot of uncertainty. And I think that, again, we're coming out the other side here. So, as difficult as that might be to sort of, figure out, I mean, I think by most people's standards, I have a strong view and on the economy, and I've been certainly pessimistic before on the fundamentals of the Canadian housing market And the reality is, if you look at it, it doesn't matter if it's Canadian real estate. Too many people are getting micro-focused on what's happening in Vancouver or Toronto real estate. Take a look around. You know, the United States housing market is ripping. The Aussie housing market, global property markets are on fire. You have the stock market hitting all record highs. You know, you've got asset classes like Bitcoin and gold that are doing extremely well this year. So every asset class is doing well, for the most part. And it really is just ultimately it's a massive currency devaluation. Canada's M2 money supply is up 15% this year. It's something we've never seen. I think the U.S.'s money supply is up 25%. So the reality is that they've basically turned on the printing machines and they've essentially papered over this economic hardship. Now, don't get me wrong. There's definitely a lot of people that are going to be left behind. I think you've created a K-shaped recovery and larger wealth inequalities. But, the markets don't care. The markets don't care. And so we're still seeing house prices are still going higher. Stocks are still going higher. And this is just the world that we're living in right now.
Does a pandemic-driven housing boom make any sense?
I mean, I think from an emotional perspective, you know, you sit back here and say, oh, okay, I guess maybe I should have seen that. Maybe I should have seen that there was an emotional factor to, you know, people's purchasing decisions, and the emotional decision is that everybody's spending a ridiculous amount of time at home. Everybody wants more space. So I guess I should have seen coming that people would want to upsize. What I guess I didn't factor on is people's desire to take on more debt or to take on more leverage, during a time of economic uncertainty where, you know, people's jobs are hanging in the balance. I certainly didn't foresee that, but ultimately people's emotional needs are greater than maybe their financial reasoning for that.
Are people continuing to delay listing of their homes due to the fear of COVID-positive people wandering through their property?
I don't think there's really a fear of COVID anymore in terms of like listing your property. I think people that want to sell, they've gotten over that. I think that was a thing maybe in March, April, when we didn't really know what this thing was. But what we're seeing is yes, you have a significant shortage of new listings, for example, in the single-family housing market. The reason being is that obviously, again, everybody wants more space. There's only so many single-family homes to go around. So you have a whole bunch of people trying to move up to get more space. And then the people that are in these single-family homes, they have zero desire to sell. Because if you're going to downsize this year, why would you do it this year? You're basically stuck locked down at home. Of all the times to downsize, this is probably the worst year to do it. So I think that is playing a huge contributing factor to the price run-ups in the single-family housing market. Just that, again, everybody's competing for the limited supply of homes, larger homes. And so, do I think that, you know, people that were maybe considering downsizing, this year will push that into next year, and that should hopefully bring on some more supply and alleviate the price pressures in that market. I think that's a very realistic scenario. We'll have to wait and see how that plays out.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, is the federal government's considering of a foreign home ownership tax likely to cause foreigners to rethink Canada?
I personally don't, really. I mean, I don't know. I think like Vancouver and Toronto already have them. Those are your two frothiest housing markets. And if you look at what's happening in the activity levels today, it's still going strong. So there's usually that initial pullback just from psychological. psychological pullback. But again, if you look at the two most expensive cities already have these taxes. It really hasn't done anything to increase affordability. I mean, what I would argue is it destroyed the high end of the market. That high end of the market's starting to come back a little bit. Certainly been, it went through a 2 or 3 year correction. So it definitely, crushed that segment of the market. But if you look at the rest of the housing market in Vancouver and Toronto, particularly these affordable segments where most people are playing, it hasn't gotten any better whatsoever. So I'm not really convinced, outside of political motivations, that I don't really think it's going to do a whole lot to actually increase affordability. So I think that's the main thing. If their desire is to increase affordability, I don't think that is actually going to make an impact. I'm not saying that they shouldn't do it. I'm just saying if I look at it anecdotally and unbiasedly, I have yet to see that it's actually increased affordability. The way to increase affordability is to restrict credit growth into the housing market, and to stop incentivizing people to throw all their money into the housing market. And the only way to really do that is to raise interest rates. When you've destroyed the bond market and there's nowhere else to put your capital, Canadians will continue to plug their money into investment condos that yield a negative cash flow because there's no alternative. That's why you don't have affordability.
Do foreign buyer taxes actually discourage investment in Canada? Because if I'm from a different country and I want to set up a plant in Canada, I'd like to have a home here as well to supervise. Does it actually hurt the economy that way?
I don't know. I don't know if it hurts the economy. It depends on, I'd argue what hurts the economy is egregiously high house prices, where you continue to funnel capital, and you continue to funnel, it's really a misallocation of capital, because, ever higher and higher house prices does not create more productivity. In fact, it just creates more misallocation of capital. You have more and more, smart people, I suppose, that go into, financial segments of the market, real estate, finance, because that's where the money is being made, even though, again, it's not necessarily creating more productivity. So, I don't really see a whole lot of economic benefit on just people trading within each other ever higher house prices. So, I'm not really sure that we should just open the floodgates and say, okay, everybody just come dump your money in here, because, that's going to result in an uptick in GDP, but at what expense, right? So, that's kind of my view on it.
Could the Bank of Canada go to negative rates? And if they did, who would benefit and who would lose?
Yeah, I think it's very likely. I think that's still, quote unquote, in their toolkit. Even though I think it's at the less desired, it won't be the first move they make. The next move is, without a doubt, is yield curve control. They've already told you that. And if you look at the reality of where the housing market's at, and the household leverage, and the corporate leverage, and the federal leverage, nobody can tolerate higher interest rates. They will have to do some sort of yield curve control. I think negative interest rates are something that would probably be looked at after that. We think that negative interest rates are obviously beneficial for asset holders. They'll destroy the savers, they'll destroy the pensioners on fixed income. So that's the negative interest rates. And again, it's not like some far-fetched thing that Canada can't have negative interest rates. They have them in Europe, they have them in Japan, they have them in Switzerland. They have them in all parts of the world, and North America is just one of the ones that it's just barely still in positive territory. So the fact that people are quick to shut down the notion of negative interest rates is more out of their political leanings, that they don't agree with it, so they don't want to believe that it will come here. But the reality is it's already on the table, and I think that it might not go through, but I think there's still a significant probability that they will be introduced at some point.
Could the mortgage market have a mind of its own even if the Bank of Canada goes to negative rates?
The mortgage market meaning, I'm not really sure what you mean by that.
Well, international lending, bond markets, and so on, because there's more than just banks that lend mortgages.
Well, I mean, I think you're going to reach a point where I think the the central banks essentially they basically nationalize the bond market. So I don't really think that that's really where it's going. Again, I think you just look at further out, and you look at Japan, and you look at Europe, and they're ahead of us. And so I think that's kind of where we're going, is essentially that these bond markets become nationalized. The central banks will tell you where yields or where bonds will trade at, and they'll be the main purchaser of these bonds. So, and eventually they'll own the entire bond market, and they'll probably just stroke a check and call it a day. So, I think that looking forward is, again, you wonder why people are continuing to push up house prices in Canada. There's nowhere for the money to go. I can guarantee you that if you can get 4% on a 5-year government bond, you probably wouldn't be putting it into a negative yielding cash flow negative condo in downtown Vancouver. But when there's no alternative, you have to put your money somewhere, and so that's what people are doing.
Are the banks being more conservative or liberal in their mortgage lending?
They're actually ramping up lending. If you look at, again, this is the thing that I talk about, so it's like, this isn't just conjecture where I'm just pontificating my views onto your listeners and just saying, hey, this is what I think what's happening in the housing market. This is where I want it to go. This is where I think it's going to go. It's like, no, you just simply look at the data and say, okay, we have 7 months of pent-up demand. Well, what drives that demand? Ultimately, people need credit. They need the access to more leverage, and the banks are happy to supply that. Why? Because they've had a tremendous amount of support from the central bank. They've had a tremendous amount of support from the federal government. And so they've been incentivized through the regulators to continue to lend, to continue to issue new credit, because they have to, because if you stop issuing credit, you run into a deflationary debt spiral and a deep, deep recession. And so they're pumping loans into the housing market, which is ultimately the bank's safest loan. You think about it, is banks ultimately create over 95% of our money supply, and that the safest way for them to create these loans is to back it against housing, because the housing essentially is implicitly guaranteed by the federal government. And so that's kind of what's happening right now. As you look at residential mortgage credit growth, it's growing at nearly 6% year over year. The last time residential mortgage credit growth grew by this amount was back in 2017 when the mortgage stress test was introduced. And the reason why it was introduced was because the regulators wanted to slow the pace of credit growth so they could slow the financial imbalances that it was created. And by doing that, they would also slow the pace of growth of house prices. Today, there's no discussion whatsoever about even the thought of slowing the pace of credit growth right now. In fact, they're encouraging banks to continue lending, and as you're seeing now, is banks are getting extremely competitive for new borrowers. They're getting extremely competitive with their mortgage rates. I think you had HSBC most recently coming out with a 0.99% variable rate for insured mortgages. So again, banks are extremely loose in their lending right now, given the economic environment.
Have mortgage deferrals stop people from borrowing more?
I've yet to see that. I think the mortgage deferrals are kind of just almost lost in the wind at this point. Again, maybe they'll rear their head, and I think they probably will more in the summer of next year, because the foreclosure process is a very long, drawn out process in Canada, particularly in BC. But yeah, again, I don't look at this emotionally. I just look at the data. The data is telling me that credit growth is growing at nearly 6%. So that's all I need to know.
Do you think small businesses are being destroyed by design?
I don't know. I don't really know if I share that view. I don't necessarily agree with a lot of the lockdowns in terms of how they're being implemented. Obviously, essentially almost forcing people into larger box chain stores. We've certainly seen a lot of the uprising in Toronto, but people packing Costco's and Walmart's shoulder to shoulder, and then your small business retailer being closed down. Obviously, I think that is completely the wrong way to be handling things. But in terms of conspiracy theories about is this an intentionally designed program, I don't know if I would touch that.
Is the push to work from home changing the real estate market?
I think it's changed it in terms of you've seen people moving out to the suburbs further out from the downtown core. Do I think that will reverse? I think it will. I think that right now these trends they've overshot. I do think that longer term, due to affordability reasons, that I think that more and more people will be forced out further and further out of the city, and with the ability to work from home at least, some of the time, I think that becomes a little bit more palpable.
We hear about people moving from cities to the suburbs and rural areas. If this is happening, who's buying those properties in the city?
There's still a bid in the city. I mean, I'm here in the city of Vancouver. I mean, I can tell you right now, detached single-family houses are ripping hot. And basically, the only segment of the market that's not doing well in the city is the downtown condo market. The high-rise condos are where there's been a strong sell-off. And that's because 50% of that market is investor-based. So the investors aren't really being incentivized to come in and support that market right now because people are leaving. The rents are down about 10 to 15%. So why you need to be discounted. You need to be incentivized to purchase. So the condo prices have to come down, and they have. But in terms of the city, people think like, oh, the city's dead. And the city's not dead. There's hundreds and millions of people that, it's a global city. The city of Vancouver is a global city. And there's always going to be somebody that wants to live, on the west side or the east side of Vancouver. Even though houses are $2 million and up, there's always somebody out there with a checkbook big enough. Now, don't get me wrong. Do I think price growth can be muted moving forward? Of course, there's always a limit. But to think that nobody wants to live in the city now because of a pandemic that is, surely going to be behind us in the next 6 months, I think it's kind of a misnomer.
Is commercial real estate in the city likely to see a bear market?
From what I hear, yeah. I don't really follow it overly closely, so I can't really provide too much commentary on that. But I think from what I hear is obviously it doesn't really take a rocket scientist to figure it out. Is the office market, particularly downtown, taking a pretty good hit.
The city of Vancouver seems to be flirting with bankruptcy. What could that mean for real estate?
I just think it leads to more taxation. I mean, I've been talking about this long before. Pandemic or no pandemic, a lot of these governments are going to continue to look for increased taxation, and real estate, particularly when it's increased in value as much as it has, it's kind of the golden goose, and I think that'll continue to be taxed. And so we've seen that, this year, despite, freezes on rents, for example, is the property taxes are still going up. City of Vancouver is going to be raising them by 5% this year, and I suspect that will continue.
People have been spending money on big ticket items like real estate and high-end cars. Could this be a result of lower interest rates, people making money in the stock markets, or other things?
I think that you have a K-shaped recovery. I think that I know there's a lot of economic pain out there, but I think there's a lot of people that are doing immensely well. In fact, a lot of people are doing better than they were pre-pandemic. So there's a lot of liquidity pumping out there, as we talked about earlier in the show. Canada's M2 money supply is at 15%. So there's basically the federal government's running a $450 billion deficit this year. So there's a lot of money floating out there. There's a lot of generous subsidies being given out. And again, all you have to do is just look at the data, and statistically it tells you that households are they built what is it, $90 billion in spare cash reserves or something along those lines. So yeah, there's just a lot of money it's essentially funny money. I think it's a currency debasement.
Is Canada likely in or headed for a recession?
I mean, I think we're obviously in one right now. I think that could you get a double dip? I think that's for sure possible, but I think that the worst is probably behind us. And, we're moving forward now. Don't get me wrong. You're going to come out the other side, and there's going to be people losing their homes that were able to do a mortgage deferral. There was businesses that were able to get some wages subsidized that even then probably still won't come out the other side. So there's still going to, like I said, there's going to be some pain. There's going to be that K-shaped recovery, but it is what it is.
Are savers in Canada about to be targeted by the Trudeau Freeland government?
Well, I mean, obviously they're looking at, the cash reserves that households have built up during this pandemic. Naturally, when you have a crisis, people save money and they try to pay down debt. So I think they're going to try to incentivize consumer spending, one way or another. And consumer spending is roughly 65% of GDP. So it's incredibly important to the government to get that moving. And I think that's kind of what they're initially talking about, is looking at some sort of programs where they can drive, consumer spending. And a lot of that ultimately comes through confidence.
What do you think the real rate of inflation in Canada is?
I think it depends on the demographics. I think that, for example, millennial would probably have a rate of inflation in the double digits. I think that, you look at the cost of housing, which is, younger people's biggest expense, whether that's rents or whether that's house prices, that's been going up. Obviously, tuitions, you have, food prices. The cost of living for a younger person is up probably in the double digits. And you probably have a CPI for some, a boomer retiree that lives free and clear on their house. Their expenses, their fixed expenses are low, to nothing to begin with. Their rate of inflation is probably closer to the Bank of Canada's 2%. But I think that's the problem, is you have these CPI baskets that are so fundamentally flawed that they try to create a basket for everybody across the nation. But, the rate of inflation in Vancouver and Toronto is higher than the rate of inflation in New Brunswick or, Alberta. So I just think that, fundamentally the CPI basket is flawed, and that's where they're running their monetary policy based off of the 2% imaginary number that they're trying to hit.
Real estate bubbles burst, but it looks like the bubble is being reinflated. Could this be the new normal?
Well, yeah, I think that there's no appetite. I think that asset markets have become such a large component of the economy today that they are the economy. And I think that, federal monetary policy is essentially aimed at supporting asset prices at these levels. So there's, you really can't, because if you think about it logically, let's just say you have a correction in the housing market. Let's say prices drop 25%. Probably not unreasonable given where levels are at today to suggest that a 25% correction, wouldn't be, you'd probably still have very expensive house prices even with a 25% correction. And let's say stocks, correct another 25%. Well, obviously that would unleash a wave of deflation, which is the central banker's worst fear. They're already fighting deflation, with the current asset level prices. So can you imagine if you had a correction across all these asset classes, then we just unleash a further wave of deflation. So I think that's the central banker's worst fear, and that's why they're engaging in essentially unlimited quantitative easing and, zero to negative interest rate policy.
As a real estate investor, do you foresee a fire sale buying event in the near future?
Not in the near future, no, I don't. I don't see any signs that point to that. I think that obviously mortgage deferrals are the only other headwind I can look at, but I think that, as I've stated quite a lot in the show, is I think that fiscal and monetary policy have outweighed the risks of mortgage deferrals. So that's kind of how I'm looking at it.
Is the price of real estate affected by the value of the Canadian dollar?
Yeah, I think that, obviously if you have a strong Canadian dollar, it's going to discourage some foreign investment. I think that certainly matters, but I think, again, the Canadian dollar continues, let's say it gets devalued. You have house prices rising, at least in nominal terms, but I think if you measure it, for example, if you measure Canadian house prices in U.S. dollars over time, there really hasn't been a whole lot of an increase, in value. The prices actually haven't really moved up much at all. Same thing if you were to measure the price of real estate, against gold. There really hasn't been a significant move in house prices whatsoever. But, again, when you measure it in your own currency, which is, again, being devalued, then there's been massive, house price inflation.
If and when the economy reopens, how long could it take to get consumer confidence back?
I mean, I think if you look at right now what's happening in consumer spending and in the real estate market, I would argue that the confidence isn't really that bad. Bloomberg Nanos puts out a weekly survey on consumer confidence and consumer confidence in real estate prices, and those are basically back at pre-pandemic highs. So I would argue that confidence is almost already there.
If the Great Reset takes hold in Canada, what happens to real estate?
I don't know. That's kind of like it's not a conspiracy theory, because I think Bank of Canada has written about it. But I don't really know. Like, nobody knows what the Great Reset ultimately looks like. Is that a new world reserve currency? Is that a new, every central bank converts to a digital currency, central bank currency? So nobody really knows what that ultimately means. So it's hard to kind of like draw conclusions as to where the housing market will be based on this hypothetical scenario that nobody actually knows the details about.
What's your opinion of the city of Vancouver increasing its vacant home tax from 1% to 3%?
I think it's just political reasons for tax revenues. If you look at it last year, for example, there was only 500 households that actually were actually subject to and paid the empty homes tax. So you're pretty much increasing the tax from 1% to 3%, to squeeze basically 500 more houses. Essentially, that's what it is. So, yeah, I don't really think, like, if you look at it, it's almost like these policies are usually counter-cyclical, right? So it doesn't really make a whole lot of sense to increase the tax today when you already have a depressed, rents are already down 10 to 15% during this pandemic. So, and values, at least in the investment condos, have already taken a hit. So the city's obviously doing it for tax reasons, but it's almost counterproductive because they could end up discouraging, they could almost depress values potentially. Like, there's almost even more, like, counter-cyclical. It doesn't really make any sense. Like, normally you would increase the tax when things are getting too hot and you just slow it. But usually when it's depressed, it's kind of, I don't know, it's very interesting because you have all levels of government minus the city of Vancouver, all levels of government are basically trying to, they're trying to ramp up consumer spending. They're trying to support households. So you have this massive government support, through CERB checks. You have the BC government giving everybody a one-time $1,000 check. And you have unlimited monetary policy support. And then you have the city of Vancouver, which is raising taxes across the board. So I don't really understand.
Is this hike to 3% then just a cash grab? Not really a thing that's going to help home affordability or the accessibility to an affordable place to live?
Yeah, I mean, don't get me wrong. I think the empty homes tax has been effective in encouraging empty homes or underutilized homes onto the market. So, like, I have seen an increase of basement suites, people that were leaving the full house vacant, for example. Well, they'll say, okay, we'll leave our upstairs house vacant because we're not in the country. We will rent out our basement suite so we don't pay the tax. Or, hey, we have these condos downtown. We need to rent them out now. So that is actually happening. It has, but I'm not really at this point thinking that, by going from 1% to 3%, that you're going to increase additional people on the market. Because, like I said, there was only 500 people last year that paid the tax. So it is more, in my opinion, it's more of a political move. It's a little bit more of a tax grab. They're basically just going to try to squeeze, these 500 or so households to pay more.
Any idea what's going to happen to all of this commercial real estate space that's being abandoned because people are working from home?
I think that a lot of people will go back to the office. That's my personal view. I guess we'll wait and see.
Steve, how can people get in touch with you?
Best by email, steve@stevesaretsky.com, or you can follow me on Twitter @SteveSaretsky.
Steve, thank you so much for being on the show.
Thanks a lot, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. As you heard, you can contact him at stevesaretsky.com and find him on Twitter at Steve Saretsky. He's online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.